Hello, we're coming to you today, February 27th, 2015, from E-Mini Trader Pro, where we educate day traders by means of personal coaching, one-on-one. And before we begin, we always have the disclaimer: you can lose a lot of money trading. Don't do it unless you can afford to, or you know what you're doing, or any other number of criteria. Basically, it's important, according to the regulators, that you know that this is a way to lose a lot of money. So now you've been informed. And we're going to talk today about a topic that I find interesting because it's a way of trading that's been around since as long as I've been trading, which is from the 80s, sitting in front of a screen trading index futures since 1990, and I've always been intrigued by what they called FloorTrader pivots and how it's a simple tool that people use to make money. I even went down on the floor and saw a friend of mine make money hand over fist just by trading with these pivot numbers. So the first thing is, people look at anything that's a tool like this, and a lot of traders say it doesn't work, or it doesn't work anymore. And, I always feel that's just a negative attitude, because you could say nothing works, or you could say everything works, but the way it's going to work or it's not going to work is going to depend on a lot of other variables, like if you have a good strategy and you have a good trade plan and you're able to implement that trade plan with total discipline and commitment, and you have a positive attitude then. So we're going to look at this in today's trading and several other days, and we're going to find that these numbers are quite amazingly important on many, many days of trading, especially in a certain type of trading environment where what we've seen the past few days is really the entire week now was in this very narrow range. But we're going to find that even on these days where you get a run for a week or so, the numbers are still very, very important, because what I use in these numbers are the pivot numbers and then the previous day's high, previous day's low in the close or today's open. So I also have these numbers color-coded. I happen to use this particular indicator from Top Dog, and it includes a number of choices like yesterday's low, yesterday's high, yesterday's close, value area high, value area low, and the resistance and support going out to 4 levels. And all these formulas are all over the internet. You can go find for yourself. Basically, you take the previous day's high, low, and close, divide by 3, you get a pivot number. The pivot number is important. I use this brown line for the pivot number, and I use the blue line for the close. Value area high and low, I use these, whatever color that is, magenta or something, and then the yellow line or gold line is the point of control. The green thick ones I use for the high and low from the previous day. And then these resistance 1, narrow range, and resistance 1, big range, and support 1, and all of these various lines. And, it's amazing how often the market will spend a lot of time at these levels having to prove itself before traders will make a commitment and continue to expand the range of the day. So the question is, well, for the people who say they don't work, they think, well, I put my order there and I didn't make any money. And then another person says, well, I faded the first time they went up to the high of the day here on this green line and put my order a couple ticks under it, and I got a trade that went from 55.75 all the way down to 49. you know, so 6 full points is plenty of room to make money. And, you know, you put enough contracts on and you had a great day of trading just by simply fading there and taking profits either at an objective or an obvious place like this, the high of the value area for the day. Once they've broken it out here, then the prior resistance becomes support. So these are tools. We use these pivot numbers, and then the pivot numbers become a way for us to create a trade plan. And you know, that's what I'm offering in E-mini Trader Pro. The personal coaching is done on a one-to-one basis over a period of time, a good enough amount of time to have a lot of personal attention from somebody who's been trading for 5 decades, going back to, I guess, 5 decades, 1975. I don't know, a long time. So the custom trade plan is something that I believe every trader has to do, because everybody's an individual, unique in their own ways, and their own strengths and weaknesses require that they have a plan that suits their own aptitudes and capabilities. And that's why I believe it has to come down to personal coaching as opposed to buying systems or methods or a lot of books, which I did all of that too. It's just that if you limit yourself to things like that, it might take you 20 years to be a successful trader. It took me an awful long time, and I feel like, you know, the people that helped me the most along the way, they're the ones who shortened my learning curve to the greatest extent possible. So the trick is finding a good teacher and then making the commitment and being able to do it. Now, some of the tools I use are seen in my earlier blogs, which are still functional there, E-mini Volume Profile Day Trading, where we went into very great depth about the whole market profile paradigm in trading. And my first blog on the ES Mini Day Trader, I went through a lot of examples, real-time time and sales of my actual trades in the day, and a lot of the psychology that's involved in setting a goal and creating a trade plan. But basically, what I'm doing on this current incarnation of E-mini Trader Pro is we're focusing on various ways of putting together a simple trade plan. A trade plan that anybody can do if they do the work, the research, the practice, the training, and then they can make and have very clear rules and be able to implement the trade plan by following your own principles and strategies and rules on a day-to-day basis. And that can be different for each individual. It could be either more subjective or less subjective, or more objective or less objective, and all of these things are things that you develop over your period of training and developing and coming up with a sophisticated trade plan that works for you, because you're able to follow the principles and the strategies and the rules that you evolved in your own process of becoming a trader. Now, today the topic is the pivot and what they call day trading pivot numbers. Let's just go a little bit more focused into what we can do and what we really have when we use this particular method of approaching the day's trading. And what I'm going to be doing on the blog is I'm going to be creating several more videos on various ways of using resistance, support, levels. And we're going to find there's many, many ways that you can find resistance and support, and you can use a few different ones, or you can pick one and really, really narrow down on that one. There's a lot of ways. So I chose this one to start with this kind of approach of looking at various ways of trading support levels and resistance levels. And because it's so old and so well known, And it still seems to be amazingly applicable in today's trading. You know, that's why I was going back and looking at the day before that. It's amazing how every one of these days it's doing so many things, keying off of these levels. Let's go back the day before that. And it almost looks like you're looking at the same chart every day. Sometimes it's going down rather than up, or up rather than down, but these levels are just quite prophetic, and you just have to know what you want to do in order to use them. So that's where the study and the research and the creation of the trade plan come in. So I'm going to talk a little bit about what people do with levels. What I do with them is I like to use levels because I do a lot of fading of a direction. Now, some people say, oh, you're going against the trend, and that never works. And I found that the highest, by far the highest probability, highest percentage way of trading for myself is to fade moves. Now, it could be a very short-term play, what you might call a short-term bet on the direction. Well, that's also what I do. I like to trade short-term scalping, and that's what I find is the easiest way to make money every day because I have more success having a sort of a framework, a structure, a way to trade if I'm looking to make money quickly. In other words, I find I could be, quote, right for 2 or 3 minutes a lot easier than I could be right for 45 minutes. So the long-term trade, you know, they tend to come back on you. So, but on the other hand, if I'm active, I'm participating in the market, I may be getting in and out a few times. I'm enjoying it, and I'm sharp. I can get the opportunity for lots of profitable trades, take my money and run. So if you go to my first blog I showed you earlier, then you'll see lots and lots of time and sales and trade by trade of how short-term scalping is. Now, if it's a period of higher volatility, you're going to get a lot more trades. The trades are going to be shorter. You're going to get your profits quicker, and you evolve based on the conditions of the market. But let's look at the levels here using the FloorTrader numbers, and we see a market opening up off the open, right off the bat. It takes off for the previous day's close. Yesterday's close is the blue line for my color scheme. It stopped right on a dime. So then the question is, if you have a trade plan, how would you make money on that? Well, there's a number of different ways. One is you could put an order in front of it because it was far enough away, you figured the market's going to bounce at least the first time it hits it. Now, in this case, that would have been a gold mine, a windfall profit right away. Now, doesn't always do that. Sometimes it'll go up there and it'll hang around a long time. Well, one option you have is you can get out of the trade at break even if it's not going your way. That's that flexibility I was talking about I like to have for short-term trading. Or you can trade other patterns that once you had this down move and you had the retracement off of this, you felt better about fading it here. And then that would have been profitable as well. The brown line I use is the pivot number for the day. So that's that difference between the previous high of the day, low of the day, and close of the day. So the pivot is a very significant number, and usually every day there will be a play off of that pivot line. In this case, they went through it pretty strongly in this case, and then as the market settled into a range-bound day, they began to trade the pivot. And this time it finally went through. You could look at this as a battering ram. 1, 2, third try, it didn't bounce, so the next one is just going to break it. Now, same thing with the value area. Value area was right near previous day's close, so you had two confluence indicators, we could call it. You also have the fact that since the market stopped right there, the previous day's high wasn't challenged. And that's a sign they don't want to go up on the day, so that you're more inclined to fade the moves that are out to the outer edges of the extremes. So these are some of the ways that we use, and we can set up trade patterns. Now I'm going to stop the video here before we go on to part 2.